Rakesh Sachdeva also sending in a query from Kanpur, and this time it's on one of those tech stocks.
Hi Udayan, nice to see you. Udayan, I am holding some technology stack like TCS, Infosys, Tech Mahindra, L&T Infotech and L&T Technology Services. And I am holding these shares for the many years. And after this recent surge in the stock market, the total weightage of my technology shares holding has become almost 20%, 25% of my total portfolio. I want to ask you a question that should I keep continue my tech holding as technology seems to be a good bet for the next 3 to 5 years at least, or should I switch to a part of it to some other sector like infra, etc. If you suggest switching, please recommend sector of your choice also. Thank you.
No, I don't think there is any pressing need to switch sectors. I understand the anxiety for having such a lot of your weightage in one sector, but I think there are very strong tailwinds in the technology sector now. You've got excellent stocks in your portfolio. I mean, one cannot pick a better technology portfolio than you have picked. And having done that, I think maybe it makes sense to stay put. The only technical risk to technology right now is that FIIs seem to be in sell mode, and FIIs hold a huge ton of technology stocks. For some reason, if they start to lighten their portfolio, you might see some kind of short-term blip in the stock prices, but I think fundamentals are very strong. I mean, you've seen the recent Accenture results and the upping of their guidance. I mean, they've upped their revenue guidance from between 12 and 15% to up to 19 to 22%. I mean, that's as big a jump in guidance I've seen from them in recent years. So I think this whole cloud migration story is a real one, and there is a lot to go along that. And therefore, I would not ditch high quality technology stocks in a hurry at all. I think you have a very decent portfolio, and it is, as you said, for the long term.
S. Pratima of Bengaluru also has a query on Bharat Forge. Let's listen in.
Hello. Holding Bharat Forge 200 shares, bought at the rate of 748 per share. Need to know its growth, whether to hold or exit.
You know, Bharat Forge is a good company. It has a very good management. The Kalyanis are very good promoters. And it is not a one-trick pony. I mean, everybody thinks of Bharat Forge as a pure auto ancillary play, but they have a fairly significant non-auto business as well, the industrial business, which actually is doing quite well once again. On the commercial vehicles front, which continues to be their bread and butter, I think things are looking up quite considerably, and they have some decent order momentum on the commercial vehicles front. On the non-autos, as I said, they're doing well again. Passenger vehicles is still a little bit of a drag, but they are making some interesting moves on the electric vehicles or electric cars as well. So I think it's a good portfolio for an ancillary business. Next couple of years, if you look at it together, I think they should be clocking on an average about 30% kind of growth, earnings growth, which is not bad at all. Valuations have moderated. This stock is no longer at 900 odd. It's trading, I think, below 700. So it's no longer a very expensive stock. It's trading at 22, 23p multiple. I would even go to the extent of saying that Bharat Forge probably is better than most of the auto stocks that you can own at this point in time, given the kind of growth expectations we can have.